All right, hello. I'm going to be doing a little breakdown on Wednesday, April 9th's gold trade. It was a buy limit that freaking shot to the moon pretty much. Gonna go over all the steps from A to Z as if I was starting from 8 o'clock in the morning when I woke up and I saw the charts. So I'm gonna get right into it. First thing we're gonna do is mark our highs and lows of days on the 5 minute of the two previous trading days. So this will be the low day and this will be the high of day here. Gold is kind of at all-time highs, so there isn't too much info that we can go on here, but we're gonna mark it all up and see what we got. This is the previous high of day, and I'll talk about where my targets would be when we get there. So weekly, obviously there's not much that we can work with other than just demand zones. There's no current supply zones. So weekly I marked up this previous contrary candle before this big push. Although ultimately the real weekly would be this one down here. I'm sure if you zoom in closer, you'll see that it's a bearish candle. Yeah, so this bearish candle before this large distribution push. That's the true area of demand where this big push came from. But this weekly is still something to take note of as price could react from it. And we can see that it literally touched to the exact pip and gave a reaction off of it. So then I'm gonna go to the daily. I'm gonna mark out my daily zones. So this here is my daily demand zone. It's gonna be that one because this one here was already used. But now, like I've said, we're painting the picture. We're seeing where it is that we're going. So now I know that price is looking for demand to continue to find new supply. So this got into here, and then you can tell that price came down and tapped this weekly and continued to push forward. So we're already painting the picture. We're thinking buys. We're just seeing where price is at currently and where it could go. So on the 4 hour, like I said, there isn't too much to work with here, so I don't have to go too far left. For demand, we do have this one that tapped after the weekly. After it tapped the weekly, it left this 4 hour demand candlestick, bearish candlestick before this large move. So I'm gonna go ahead and mark that one. And then for an H4, I wouldn't necessarily mark this one because this large candle kind of interrupts this whole candle. So I'm gonna leave the 4 hour blank just because there really is nothing else to mark on the supply side. And then we'll go down to the 1 hour and we'll see what we got on the 1 hour. 1 hour, we have this 1 hour contrary candle before this big push. But also mark up any other contrary candles before or like in the way, especially on the higher time frame, such as the 1 hour and up. Price could definitely give a reaction off of these zones, even if it's not where the push actually came from. So this one may not be as effective as this one. This contrary candle may actually give a bigger push than this one, but we are scalpers. We're just looking for little reactions and for price to give us an entry on these areas. So then on the 1 hour, we'll go ahead and mark this one. So this is our current supply that we're working with. We found demand being the weekly. Now we're finding supply. And then we have this 1 hour candle here stick that's here as well. That's on the 1 hour. Price gave this distribution up, came back and tapped this area. So I'm still thinking buys with our target being this H1 at 3090.65. And then we'll go down to the 15 minute and we'll start seeing what we have here. So automatically I see that we have a previous high of day here. And then I'm going to zoom in and see what we have here. So I see that we have an M15. M15. I go down to the M5. M5 is literally stacked right on top of the M15. I'm going to mark it anyway, but it's literally right on top of it. And then the 1 minute. We have this 1 minute demand here as soon as it loads up. Boom, right here. Actually, that'd be this one. this M1. So because we have all these time frames in confluence, even though the M1 is not with the M5 and M15, we do have the previous high of day there. So that is an automatic buy limit that you can place. You don't need to wait for an entry confirmation because you have two time frames in confluence along with the previous high of day. So you have M15 and M5. If they're both together, you can take it with the previous high of day. But if there's no M1, you need an M1 confirmation. The M1 is down here, but we do have previous high of day along with the M5 and M15. So that is automatic buy limit. You literally just place it and you let price do its thing, with our market direction obviously telling us that price is finding supply. It's already found demand. It keeps pushing. Nothing here really says that a demand has been used, but that when we're looking for a demand that's used, we're usually looking for an M1 confirmation. This one is a no M1 confirmation needed. Buy limit right off the bat. You got M15, M5 together with previous high of day. Those are all confluences stacked on top of each other. So you're already thinking buys with this H1 3090 as our main target, but you can go for a 1 to 2, 1 to 3 is the goal. The risk to reward is going to be what's going to take you to the next level in trading, not necessarily catching a whole 1 to 11 move, but we will see that price does in fact make the entire 1 to 11 move. And then watch price play out. Boom, activates our order, messes around, goes to 1 to 3 and continues. And that's it. That's the strategy from A to Z. I didn't go crazy marking up all these other M5s or M15s because we did have our previous session setting us up. So we're trading New York. Previous session being pre-New York, this blue area, set us up for a buy with a strong distribution, a strong move. Had it been like this, all this extra nonsense, and if price had come down, then I would have been looking for buys and M15s or M5s along the way, because I'm still thinking buys. The only way I would have thought sells is if it would have broke past this M5 and done something like this. If it would have broke down all the way down here, then I would have looked for a sell opportunity to take us to the H1. And then from the H1, you could look for buys. Or if price just disrespected this completely and came down, then you would look for an entry somewhere around here to take you to the true area of supply, which was this 3090 H1. And price ended up smashing literally straight through that H1 and continued to go. And that's the trade.